for allowing the change of registration. We know that after the change of registration, then legally speaking, it will be the real shareholder, as everyone who wants to log in the website of that authority, they can see that the shareholder is registered as this one. So they have to go through the registration procedure to make sure that their property rights is being granted. But the first time when the new investor go to the authority to make the exchange, to make the registration, then the staff of that authority told them that you are not allowed to make the change, as we need you to provide some more evidence to prove that you are the true buyer. For example, the approval from its parent company. Do you still remember the SOEs are the final holder of the Shenzhen company, and it owns the Beijing company? If the transfer of shares of these company's shares, they need to get the parent company's approval. So they go back and prepare for the documents which are required by the staff of the authority. 2 days later, they come to the institute again and ask for the exchange of registration. Then the staff of that institute mentioned there are several trivial issues, for example, the signature. Previously, the signature was chopped, and the seal of the representative of company were not recognized by the authority, and they required the signature in person. So they go back and to prepare for the signature, and 1 week later, they come to the authority again and ask for the exchange. Then the authority said that I still need the approval to prove that the SOE has approved the Shenzhen company's transfer of shares. And this time, it's not just this approval. It requires the approval of the government, as under this regulation, which is to transfer of SOE shares. One article says that if you want to transfer the important assets of an important subsidiary, you need to get approval of the government. If it's not important assets, then you need to get approval of this parent company. So there are 2 levels. One is the parent company has the right to approve transfer of subsidiary shares. Parent company. The second way is that if we want to transfer the SOE subsidiary shares, we need to get the approval from the government. So it's about the issue important assets. What could be treated as important assets? There are no requirement to the amount. For example, 1 million is important or 2 million is important assets. So the staff cannot make it very clear. They just want to get the approval of government, but it's almost impossible at this stage to get the government's approval. And so they negotiate it and communicate it with the administrative of industry and commerce for almost 1 week. And finally, they successfully changed the registration of the shareholder. So it's a real case, and you can see that it takes almost 1 month to make the change of registration. Sometimes it could happen like this, but if you prepare all the documents well and have a good communication with the authority, it would be easier to make the change. So after making the change of registration, they come to the second fight. It's just like a battlefield. They come to different battlefields in order to get the final controlling right. This is the real investor, Russian investor. They have made the change of registration. it has been the real shareholder of Shenzhen company, but it only owns 80% of the Shenzhen company shares, and the left 20% of shares were owned by some 5 other shareholders. And these 5% owns 20% of the Shenzhen company's shares. So we might say that since it holds the majority of the shares, it could control the Shenzhen company whatever way they want, but in fact it's not the case. As the original article of association of Shenzhen company, which we call it AOA, Articles of Association, it made it very clear that if you want to change the content of this AOA, you need to get 2 consents. The first consent is that it must be more than 50% of the shares. They must get this level, and at the same time, they need to get the half of the shareholders' consent in order to change the AOA. AOA is quite important. It's just like the constitution of a country to a company. To a company is the constitution. It decides who is the directors, who is the representative of the company, and the asset and the capital of the company, and the payment of the capital of the company. So it's quite important. If you have the right to change the contents of AOA, then we can say that you have the right to control a company. But as you see, the original AOA made it quite difficult to change the content of it. It needs the 50% of shares as well as 50% of the shareholders' number of shareholders. So this investor was very unhappy to the content and needs to remove requirement. But what he can do to get the controlling rights? As lawyers, we would come up with some method to help our client. In that case, these 5 persons was very difficult to communicate. They refused to appear in the meeting, shareholders meeting. They refused to give approval to change the content of AOA, as they get no benefits from the transfer of shares. So lawyers will advise the Russian company to transfer shares to new ones, to new shareholders. And the percent could be very low, just 1% or 2%, things like that. If they transfer shares, for example, to 5 other persons, 5 other shareholders, then there will be totally 11 shareholders. And the 5 persons will follow the Russian investor's order. There will be 6 to 5 shareholders. Then they could get the approval. Originally, it had already holds 80% of shares. It also meets this requirement. They also meet the second requirement, so they can change the content of AOA. So by doing this, these shareholders would have no power to control the content of the AOA. On the Chinese law, if you want to transfer your shares to some other person who is not the original shareholder, you need to get the approval of the 5 shareholders. It's the mandatory requirement of Chinese law. You cannot transfer your shares on your discretion to anyone you like. You cannot do it. But in order to successfully transfer the shares to the 5 shareholders, we advise them, the foreign investor, to make the price very high. For example, it's only 1% of shares. We make it the price of this percent of shares very high, to a degree that the 5 shareholders will not accept that price. Then you can transfer. As they will not accept it, you can transfer to others you like. But you will not choose to transfer a larger percent of shares, as you need to get the control of that company. On Chinese law, there are 2% are very important. The first one is 25%. The second percent is 66.6%. if you have shares more than 51%, then you can control a company to a level. But if you can get the percent more than 2/3, then you can almost decide everything like, but you cannot make the company solvent. If you want to get the company solvent, you need 100% consent from all of the shareholders. But this percent is quite important to control company. So this foreign investor had already got the percent to control the company. So they successfully go through this battlefield. And after getting the controlling power, they can change the directors, the managers, or put the new ones, which are their own people, into the post. By doing this, they can control every aspect of the company. So after getting the controlling power, then they need to do something. We know that at first stage they get the registration, they get the change of registration to be shareholders. The second battlefield is to get the controlling power of the company to change the AOA. And after doing these two things, the last one is to ask something from the seller, which is the Beijing company, who originally controls the Shenzhen company. They have a contract, transfer of shares contract. And I have said, if you want to transfer the shares of SOE, you need to have an accounting firm to audit the assets of this SOE company. For example, according to the accounting firm's report, is 1 billion. The assets value is 1 billion, and the Russian company used 1 billion to buy the shares of Shenzhen company. Then after getting the controlling power, the Russian investor hired another accounting firm to audit the Shenzhen company value, Shenzhen company's asset again. For example, according to the new accounting firm's financial report, it's only about $0.5 billion. Then there is a difference of 0.2 billion. So the Russian investor might ask the Beijing company to explain why there is a difference at to 0.2 billion, why the financial reports are different, why it's lower than the reports that were provided by the Beijing company. This is the first way. The second way is to hire lawyers to make a due diligence to invest all the legal facts of the Shenzhen company. For example, whether it legally operated. In fact, when we did the due diligence, we found that several legal risks were not disclosed to the Russian investor originally. And the risk is quite serious, in fact. It's about the future operation of the Shenzhen company. So we told our clients that there is legal risk that was not disclosed to you, and it may affect your operation of Shenzhen company in the future. So the Russian company contacted the Beijing company to ask them to explain why there is a difference as to the value of the Shenzhen company, and ask them to explain why they didn't disclose such an important legal risk to the Russian investor. They negotiated for a very long period, and the Russian company originally asked for payment from the Beijing company. For example, this amount should be paid by the Beijing company to the investor. But the Beijing company made some compromise. Finally, there are no payments in this case, but the Russian company did get some benefits which may not be got if there are no financial reports at this number, if there are no legal due diligence. So after doing these two things, the Russian company and reached agreement with the Beijing company to quit up the right to get a payment and ask for some exchange from the Beijing company. And it was there are no disputes, legally, litigation between the two parties. But because of this method he used, just like auditing and legal report from lawyers, they get the benefits which quite important for their values and the operation of the company in the future. So that's the two cases I have introduced today. By summarizing these cases, the first point I want to say that before a foreign investor make an investor in China, it needs to have a roadmap and hire some professionals to give a report. For example, the taxation issues and the company structure. It would make the future operation much easier. The second point is that after there is some very important method to circumvent some difficulties. For example, in this case, they need to get the change of LOA in order to get the controlling power. But the other 5 shareholders didn't cooperate. By doing this, for example, they transfer a little percent of shares to some close or related person, then they can get the change of LOA, and finally they got the controlling power of that company. So lawyers can always come up with some method to fulfill the client's requirements. So the law is not so strict in China. Yeah, that's what my experience to this case. And I can say that with our help, our clients almost fulfilled his requirement, and he also got some benefits which may not got if there are no lawyers' due diligence, lawyers' report as to the legal risk of the Shenzhen company. Yeah, that's the presentation I give to you today. Thank you. If there are any questions, I'd like to talk about your questions. And by dealing with questions, we can go further to the Chinese law related to foreign investment. So, is there any question as to the content of the lecture? Yeah, it's a bit profound, and it's professional language, professional content. And as a foreign investor, what you need to do is to find some good professionals to do the things, and you need to come up with questions first. Tell the lawyers or accountants or some taxation professionals come up with questions. Ask them to solve it, and you can assess their solutions. So, some other questions which are related to Chinese law could also be come up with. It may not related to the PowerPoint.
Well, I have a question, but can I turn to you personally after the lecture, if
Sure.
it's possible?
Sure.
Okay, thank you.
So, do you have a question? So, previously, I decided to give the presentation in Chinese, and because of the language issue, and change it into English when I come here. So the preparation may not be so good, but I hope you can understand the things that I'm talking about. From these two cases, you may get some point as to the operation of law in China. In Russia, I think it's almost the same. To foreign investment in China, the taxation issue is quite profound. You need to get some very experienced taxation professionals to come with the ways to save the tax payment. Okay, is there any question? Any question which are related to Chinese law? If I can answer it, I may answer it on point, on the spot. If I cannot, I may send email to you later. You may not invest in China right now or in the coming months, but the basic principle are quite almost the same. It would not change in the coming decades. For example, you need to find ways to save the taxation. It's almost the same structure.
Well, it depends where you invest. I mean, the industry, yes. Because the split of the shares, the different industries are different, right?
Add to the regulation, add to this one, there are no requirements on the industry. But to enter into industry,
yes.
there I need to get some. There are 3 levels, in fact. The first one is encouraged investment. The second is limited investment. The third one is forbidden investment. Forbidden investment, under this category, foreign investors are not allowed to invest into this field. As to the limited ones, you may require to invest less than 50%.
Less than 50, yeah.
For the encouraged ones, you can invest 100%.
Yeah, but those industries are not exactly compatible.
Yes.
And this hasn't changed since.
It changed in my mind.
I mean, the split of the percentage, I mean, you still have 51% in the key industries, and you have like 100% in the forbidden industries.
Yes, but in fact...
That's good.
Yeah, according to my knowledge, someone can own 100% by using some methods.
Well, yeah.
Yes. For example, in that education industry, there are different types of education. For example, the education of child, commercial education, online education, some other kind of. As to the online education, foreign investors are not allowed to own more than 50%. But as to some commercial education, the percent may be higher. There is a list of the field of investment, and there are thousands of categories. The latest version is 2015, which is published by the MOFCOM. And it's made it quite clear with fields, with kind of industry, foreign investors are allowed to invest. And to this field, it gets less and less. 1 decade ago, there are many ones under this category, but nowadays it has decreased quite a lot, and foreign investors are welcome to invest in many more industries in China. From the 1st of June, Hong Kong companies, if they fulfill some requirement, for example, if they operated for more than 3 years, they can enjoy the same rights as domestic investors. For Hong Kong investors, could it be Hong Kong company or could it be Hong Kong nature person? And they can enter some industry which may not be allowed for invested by foreigners. And it comes into force this year. The law always changes, but the basic principle is almost the same. So it's about 1 hour. If there are no questions, we may say it's the end of the presentation. Thank you so much.
Thank you.